Well, hello, folks. I'm L.A. Little, and this is your weekly NeoTA wrap, where we take a look at these markets. We do it from a neoclassical perspective each time, asking ourselves what happened last week. What does it tell us about the coming ones? Do this show once a week, every Sunday evening, broadcast at or before 10 o'clock Eastern Time, archived on YouTube under the channel L.A. Little. If you want to subscribe, get notifications anytime content is pushed, just reach up here on the right-hand corner, hit the subscribe button, and you can follow along free and easy. It's the way it ought to be. As far as what happened last week, let's take a look at it. We had a pretty good push one more time on these indexes, 6 weeks in a row now. Outperformance on the Russell, so you had the small caps outperforming the others, pushing back up. But the real strength has been in the NASDAQ. Was the strength again last week outside the Russell. NASDAQ up almost 9% now on the year, 2% on the S&P, flat on the Dow, flat on the Russell. That's what the numbers look like. If we look at what the charts are telling us, there we're going to see a failure on the S&P 500. What is that failure? Well, it's the breakdown bar. You get over it, you go back underneath it, right? You close under it. So you get over it here, back underneath it. You 6 weeks up off the low, straight up. You know, what is it, 200 and something points. And you fell at the breakdown bar. That's the last spot to fell, in fact. If you get over this area, you go into the tops, which is, if you look elsewhere, what we have done. The strongest of the strong, of course, has been the NDX. That pushes over the top, swing point high, does it with volume, trend transition, right? All the way off the bottom, all the way back up to new highs. NASDAQ, the broad composite. So, you know, the more concentrated NDX is already over the highs. The broad composite does what the S&P can't do, and that is that it gets over the breakdown bar. Trades over it, stays over it, has volume. This looks like it's going to the highs as well. And then finally, if we look at the Russell itself, you know, the Russell had the outperformance last week on a daily chart. Russell gets over the swing point high, has the volume on that push over that swing point high, transitions trend to bullish on that time frame. Look at it on a weekly, of course. This thing's way below, but what you've done now is you've got a breakout on 2 time frames on the Russell. That says the Russell's going to try to push higher. Where can the Russell go? Well, the Russell is already doing the bearish retest region here. That's going to be the next spot, is to get over that high, which is here, which is also its breakdown bar. So once more, you've got a mixed market in the sense that you've got strength in some of the market, and you have a little bit of, you know, failure / weakness in other parts of the market. You're stretched. You've been up 6 weeks in a row. When you look at any of the indexes outside the Russell, you're quite stretched. Can it pull back? Yeah. Will it pull back? Maybe. Should it pull back? We don't have signals yet. It's certainly not any significant signals to tell us that's what it's going to do. And so if you're looking at this market and you're saying, I want to short this market, you just got to keep holding off, because the short just isn't there. In fact, you know, you have to continue to lean long. If you remember on Thursday, we were talking about this market was probably, no matter how that employment number came out, this market was probably going to try to push forward. And, you know, even though it struggled, it actually did try to do that even on what turned out to be an extremely strong employment number, which did what? Sealed the deal on a Fed hike in December. Big spike up in the dollar off that employment number. You'd already had the big spike up off the Fed a week prior. A little bit of a retrace and then spike higher. If you look at this on the weekly, you now have a breakout on this time frame, and you break over 2 bars, you break over this one, you break over that one. And so the dollar transitions, it's a little bit less volume, but transitions going after this swing point high, and then we'll go after the top once that is done. Now, with a strong dollar and with all the Fed speakers last week, including Yellen, basically telling you December they're going to hike the rates. With a strong dollar, that probably is going to get stronger, not weaker. You're going to see fallout from that in various sectors around these U.S. markets, and you're also going to see fallout with respect to overseas markets, in particular the emerging markets. And you could see that on Friday. The employment comes out, these pull back. Emerging markets are stuck in this range up here. And yes, that's kind of bullish in the sense that it's moved higher off the lows. But if you pull this back and look at it on a weekly time frame, it's a long way to go to even get close to back to its highs. And matter of fact, just to get back to the bearish retest regen is still in front of it, not behind it. So emerging markets, yeah, they got a little push up, but man, these guys have sold off. They left volume at the bottom. They're getting a little push up. Matter of fact, they just basically completed an ABCD structure on the way up, or almost, and will do so when it gets up here to this swing point low. But emerging markets hurt. What else is hurt? Well, commodities. It doesn't matter if you look at the grains, the industrial metals like copper, the oil market, or the precious metals like gold and silver. All of them rocked lower and continuing lower off of the strong dollar. And you can see it here in the continuous commodity index, where you've got an ABCD structure that was in place before, completed down, right? Set up another one. That one just completed down as well. And if you pull this one back and look at it on a weekly, this one's getting ready to go after the lows one more time. And so, just on any measure you want to use in terms of commodities, just rocked lower time and time again. The question is going to be is this the bottom, or do you get another leg to the downside? And right now, with the dollar as strong as it is and wanting to go back to the top side, you have to think you may see some more downside in these various commodity sectors and indexes. Pulling over to the other side of the equation, if the dollar is strong, then you're going to have weakness elsewhere. One place you're going to see that weakness is you're going to see it in the FXE. So the FXE has done a series of ABCD structures to the downside, basically completed another one on the daily time frame. If we look at it here on the weekly time frame, this one just broke another swing point low. If you remember, we broke one back here that said we should get 2 to 3 bars to the downside, broke on multiple time frames. You got 2 bars to the downside. You break again, that says you should get 2 to 3 bars to the downside. Going to go after this swing point low next, and then all you have is the lows itself. So euro itself going back, heading towards par. If you look at the other currencies, you have the same sort of situation going there. Now just flip through the majors. Here's the Australian dollar. I'm on a weekly time frame. You can see them coming off those bounces, right? Coming back down to test the lows. Britain, same thing. The Canadian dollar. Now the Canadian dollar actually has held pretty well comparatively, but it didn't have much of a bounce. The FXE we already looked at. If we look at Switzerland all the way back, almost all the way back to that huge spike up about a year ago when they announced that they were no longer going to stick with the euro as they had been doing. If we go to the yen, same thing, starting to come down, starting to try to go after the lows again. So dollar up against all currencies. Why? Because we're going to raise rates and nobody else is. Matter of fact, everybody else is in a race to zero, and that strong dollar is going to hurt anything priced in dollars in terms of the commodities, in terms of debt, which is why the emerging markets are having a tough time. That's the scenario. That's the setup, and that probably is going to continue, and you have to expect that's probably going to be the case. So if we rotate back around to the S&P 500 and we ask ourselves, what are we going to do this week? At this particular point in time, you really do not have any strong signals, certainly no neoclassical signals, that tell you that this thing's ready to pull back yet. And it doesn't matter that it's going up 220 points. I mean, it can go up 240, 250. So until you get some sort of failure on more than one index, and so far you've had one index, take a break and everything else go up. Until you see something that's more than just a one index, kind of a pause, you got to just believe the market's going to continue higher. And sure, it's going to retrace at some point, and sure, you can try to play that retrace when it gets ready to take place, but you need some failures. And so far, we just haven't seen them. If we pull this in on a more micro level, you just have a little small pullback like you've had before multiple times. Small pullback. Look at the long tails on this. This is probably going to try and continue higher. When you do get a retrace, it can come back into the 240, 260 to 240 area probably. That would seem like a reasonable spot. But right now, I just don't see anything that's telling us that in fact is on the table at now. And if I look over at the stronger indexes on a daily time frame, I don't see it here on the NASDAQ. I certainly don't see it on the NDX, and the Brussels just broke out. So if you ask me what this week looks like, it looks like more of the same, and that is that, yeah, we may get some rolling weakness. There's areas that are going to get hit. There's areas that are going to benefit. And that rotation, which is what it looks like we're getting, is probably going to be even more visible, shall we say. And you saw a good hint of that on Friday. You saw the financials, for example, strongly up. You saw the interest rate sensitive stocks strongly down. I don't think that's over. I think you're going to see that continue. So you got to position in the right places if you're going to roll with this rotation and stay out of those places that are going to get hurt. That's it for this week. Let's pick it up again tomorrow, and we'll see what we got. Until then, have a great one. Thanks. Take care. Tell a friend. Tell two. I'm LA. This is and was your weekly NeoTA wrap. Have a great night. I'll see you tomorrow. Good night.